All right, so I welcome you to this Zoom meeting. First of all, just a little disclaimer. I'm not a Forex guru. So every information you are going to get from here is for educational purpose. And please, Forex is risky and is highly profitable as well. So you are not expected to invest the money you cannot afford to lose. Despite good rules to keep your money safe in this strategy, it's advisable you take your time to study the strategy very well to see if it can suit your psychology before and test it for quite a time before you can put in your real money. All right, so I will start by going through the strategy once more for better understanding. I may not go into detail because this is my VIP strategy. So I will go into detail with the VIP members, but here it's not going to, I won't go into detail, but from what I'm going to explain to you, you'll be able to trade this strategy very well and be profitable. All right. So I will use some past setups. Thank God I was able to screenshot some of them. We'll use that to look into how to really apply this strategy. So first of all, I will start with this one, BTC USD, a Bitcoin on, let's see, I think this one happened on the 1st of June. This was a setup on the 1st of June. So you see my flashcard. So the strategy is immediately after Asian session. It is best traded during the London session and maybe first part of the New York section. So once you come out of the Asian section, all we are looking for, just wait for a drop or a rise of the market. And when that happens, you should see, this is for a sell, you will see a supply zone created. So this supply zone, as you can see green and purple color on this supply zone. The supply zone here, this is the 30 minutes time frame. And we have a supply zone. The main supply zone for this time frame is the 30 minutes supply zone. Just add this. Okay, let me go to the chart so that we'll look at the indicator. So 30 minutes time frame indicator list. So I have my supply and demand zone here, which is this one. So the time frame you leave it 0, so that 0 means for the current time frame. Then you can remove the edge price, draw edge price. I put it false so that I don't want to see the edge prices. Then the alert, I also make the alert false. So the supply zone color is green. My supply zone retouch, I make it yellow. I made it yellow. That is why you're seeing yellow. So then the demand zone is also green, and the retouch of the demand zone is gold. Okay, I'm using gold for the retouch, not yellow. That's what you have here. So for that picture, I have another demand zone added to the 30 minutes time frame. Sorry, still the same demand zone, but at this time, I changed the time frame to 15 minutes. Then on that picture, my supply zone is black, the retouch is also black. Then the demand zone is black. The retouch is also black. Then of course I don't want to see the edge prices. I make it fault. Alert. I don't want the alert. So let me also reduce the width. Zone width 1. So okay. Okay, so as you can see here, so the one that is green is a 30-minute supply zone, a demand zone in this case. Then the purple is the demand zone for the 15 minutes. It's showing purple, it's black, but it's showing purple because it's on top of the green. So if I'll bring it as you see it, black. So that's it. So once the price drop, a supply zone will be created. Both 15 minutes and the 30 minutes will be created. And the drop should happen in a way that it breaks market structure. Then you have your supply zone, 15 minutes and 30 minutes. So we want price to pull back to retest this zone. And I will not sell from the 30-minute supply zone. I will sell from the 15-minute supply zone just to reduce my stop loss. So this is the main zone we are looking at, not this one on top. Price may break this one, get here and drop down, but this is the one we are interested in. Why? I will explain using the chart. So that was 1st of June. So BTC USD 1st of June. Please mute yourself. Somebody's mic is on and you are not talking. Please unmute yourself. Okay. After the Asian session, we want to see a drop, breaking market structure. Then at the same time, we want to confirm that we can take that trade from the 4-hour time frame. This is the 4-hour time frame. So on the 4-hour time frame, we want to see that our AFI stochastic is showing us red, that the price is bearish at that point. So once it's showing you red, you have your first confirmation that you can go for the trade if the setup is met, if the criteria are met, rather. Then what you do, change to your line graph for the 4-hour time frame. This is the period we were. So we want to draw a trend line. You want to see a point where you can draw your trend line to check if that trend line has been broken. So we have this point, we have this point. Go to your candlestick pattern and you can see that at this point, the trend line has been broken. That is the second confirmation. Trend line has been broken for a sell. So if you look at that time, at this point, this is where it was broken. This is a retest. If you put your crosshair, you see that this is where we were at that time. So the trend line has been broken. Go back to your 30 minutes time frame. The next thing, just go to your line graph as well and see if when price drop, you have a trend line that was broken as well. For a sell, you will be marking your trend line to the upside, not to the downside. So you can see these 2 points. Market broke the 2 points. Go back to your candlesticks. If this is not clear, you can as well do that on the 15 minutes time frame. You see here. That is when if the 30 minutes is not clear for you. So when this happened, we have a supply zone that was marked at this point. For 30 minutes and 15 minutes was somewhere here. So once you have seen this, the trend line break, supply zone created for both 30 minutes and 15 minutes, then you are waiting for price to go back to retest this zone. When price is coming to retest this zone, you must ensure that the retest happens below or on the trend line, on the 30 minutes trend line. So, there was a zone here at the top. So we are not interested in, if this price break above this zone to go and retest this one, we are not interested in that. We are interested in the zone that on the retest of the zone below the trend line you drew. So as soon as price hits the 15 minutes demand zone, supply zone at this point below the trend line, that is when you take your entry. Then put your stop loss here. Because of spread of some currency pairs and some brokers, you can ignore putting your stop loss. You just wait. If price break above it, you close the trade. Because if not, some brokers and some currency pairs, because they will just take you out, even if price did not get to this point. So you can either raise your stop loss, but ensure that price will not break above. Once price break above this level, this point on top of your demand supply zone, that trade has hit stop loss. So that is this way you're taking your entry. Take your entry from here. This is your first target. So, and remember, as price is retesting the zone at this point, ensure that your stochastic in the 4-hour time frame remains here, it remains red. And that is it. Very simple. But you need to practice this very well before you. All right. So I think let me give one more example. Let me check another one. So as you can see, this was my projection, and at the end, price hit it and dropped down to our take profit level. This was another one, Euro card. See the movement, and this was when I took the entry. This is for GBP USD. Okay, I'll use this one to explain something else. USD card, the projection, and this was the result. Let's look at this gold, USD CHF. USD CHF of 2nd of June. This was the projection, and this was the result. I sent all this flashcard on the group for everybody to see. So the only thing is what you are watching for at the retest. Ensure your AFI stochastic in the 4-hour is bullish, is green, and price is retesting the zone above the trend line, you take your entry. Even if you lose this trade, it's not going to take any much from you. Stop loss is around 5 pips, 3 pips, 2 pips. All right, so let's look at the USD CHF. USD CHF 2nd of June. This is when it happened. So this is when it happened. So here, when the setup was building up, we see that our stochastic on the 4-hour was bullish, it was green. And the next thing you are looking for at this time is to check if you have a trend line break for a buy. So, and as you can see, we have a break here. You can use 1, 2, these 2 points, or you use 1, 2. So any one you use. So let's use it. This is the point. Change to your candlestick pattern. So at this point, at this time, you can see that the trend line has been broken. I think if you use this point, it will be clearer. Whichever one you use is fine. So at this point, the trend line has been broken already on the 4-hour, and our stochastic is green, showing us green. Then you are waiting for a retest. The zone was marked here. Check your trend line on the 30 minutes time frame. If we have a trend line that is broken, that was broken. Yes, we have one here. Look at here. Trend line was broken here. It's preferably you use the trend line break that happened during or immediately after the Asian session, but the same day. Don't start drawing trend line from the previous day. Use the one that happened that morning. That one is very effective. Change back to your candlestick pattern. As you can see, there was price pulled up, breaking market structure here, and the retest. This retest happened above the demand zone. Stochastic was still green at that time. You take your entry. Stop loss here. How many pips do we have here? Stop loss is 3 pips. Yeah, 3 pips, 3.9. That is about, okay, let's assume 4 pips and see what the trade gave. Your target will be here, somewhere here, first target. And this gave up to 50 pips. So if it is just one trade, you take it, it's fine. So that is it. So now, another point I promised to discuss with you is how can you take your entry, and even if your trade hits stop loss, you will not be at loss. Now, if this trade fails, once price hits the zone, price will travel up to 3 times the level, the size of your stop loss before coming back. I've observed that. Price, if this trade hits the demand or supply zone with the correct criteria, with all the criteria met, this price will move up to 3 times of your stop loss size. So this stop loss is 4 pips. Price will move up to 12 pips before it will return or reverse. So what happens is, if you are taking your entries, you may take two entries, the first one with a bigger lot size. And once that one hits 3 times the size of your stop loss, you can close that one, you protect the remaining one. Or you can just leave your stop loss here so that even if it hits your stop loss, you will not be at loss. So you allow the remaining one to, or you protect, when you protect, you allow it to run. You can do it for every trade because some of them may retrace back and take you out. So I will take example from the GBP USD. This GBP USD. GBP USD happened on the 7th of June. Let's look at that. GBP USD. Yeah, 7th. So this happened here. We have the setup around this point. So this is for a sell. Change to your line graph. Change 4-hour time frame for a line graph to your line graph. So we are looking for a sell at this point. We want to check if there's a third line break. This point and this point. So price actually broke the trend line on the 4-hour time frame. Let's check in the 30 minutes time frame. 30 minutes time frame for a sell, we have these 2 points broken. Price broke the trend line here. You can check 15 minutes for clarity if it's not clear to you. So we have these points, this and this. You can see that price broke these 2 points. So we have supply zone marked somewhere here. And on the rate test of the zone, after this drop down, on the rate test of this zone, which was here, our stochastic on the 4-hour time frame was still bearish at this point. It was still red. So I took this entry. So let's look at this. Entry was here and stop loss was about 5 pips. This price moved up to 18 pips, 17 pips. So 5 pips times 3 is 15. So once this price gets to 15, you can close one of the trades, one of your entries, and protect the remaining one. So that in case price moves backward or reverse back, even if it takes you out, you have already made your profits. And that first entry should have the lot size should be higher than the remaining entry. Maybe if you want to take 2 or 3. So with that, it will cover. You make some profits, even if price reverse to hit your stop loss. Because I've seen it happen several times. So this price, once price hits it, it will push up to 3 times your size of stop loss. So that just it. So I will stop there and take some questions. Please, if you have any question, you can ask based on this strategy. As I told you, if you have further questions, if I'm able to answer, no problem. But I'm majorly focusing on this strategy. No questions? All right. Someone says the explanation is clear. Okay. From my first explanation, what pair was that? So I talked on, let me check. Okay, BTC USD. So there are some cases, especially, I think this happened with NZD card. Let's see. NZD card on Friday. So on Friday, at this point, we had this happen. When I saw this setup, price breaking this trend line, everything happened on the patient session. But immediately after I started session, you saw this drop, breaking structure, breaking market structure here. So price drop, broke market structure here, and I was having a zone here, a supply zone at this point. We're having a supply zone at this point. So as you can see, price broke this setup. I was very busy. I was very busy on Friday, so I didn't see when this happened. But when I came back in the evening, I saw the drop. But I think I posted this setup. If I don't post it, maybe it was after that was when I posted it. So on the rate test, I think by that time the stochastic has changed to yellow. So and there are some times this stochastic may be pushing up to the upside, maybe pushing up, and it may not show you yellow at that particular point. But before price will get to that level, before price will get here, you will see the sign. It may be bringing out the sign that this thing is about to show yellow, yellow. To just go yellow, yellow, red, yellow, red. Just is a sign. So by that time, you should know that that setup may not work out very well. And mind you, you must not just must not. It's not every trade that will go well. So it's very important. Don't just focus on the other setup, leaving this one. There are some times the rate test will happen, and maybe this has changed to yellow. The rate test happen and price drop. It has happened sometimes. It happens most times. So don't use because of that to keep aside the rules and take the entry. Please follow the rules. And although on your own, you can decide to add more to this strategy to suit you. You can actually develop something better than this from this strategy as well. So you just have to sit up, study the market very well, and you can as well develop something from this particular strategy. It's not a crime. All right. So thanks for joining, and I wish you a very successful trading week as we enter the new week. Thank you very much. If there are no other questions, I think we can end the Zoom here. And I really appreciate you guys for your encouragement. Thank you for the likes. Thank you for watching my videos. Thank you for subscribing to my YouTube channel. And if you know you have not subscribed, please do so, and also click on the notification bell to be alerted anytime we release any new video. So currently, admission is going on for mentorship class. After the mentorship class, once you are through, you'll be added to a VIP group, and from there you enjoy some benefit. I'll share all my setup in details, more detailed than the one you see on the general group, and other strategies that you can use to trade the forex market and volatility 75 as well. So please, if you're interested, you contact me. There's a contact I place on the um, Telegram group. All right,
Thank you.
you're welcome.